At CNBC's Evolve Global Summit, I did have a chance to sit down with Chevron CEO Mike Wirth. I asked him whether he thinks we've seen a peak in oil prices. Here's what he said.
The tightness in supply hasn't gone away. And so to the extent that we were to see China reopen fully, and we're still seeing some COVID restrictions there, see air travel return fully, there are some up legs in demand that could start to really pull hard on that supply again. And then, of course, there's the risks around the situation in Ukraine, the sanctions, and how all of these things play out. And so I would say I think it's good for the economy that prices have moderated, but I also see the risks remaining skewed towards the upside.
I also asked him about this morning's hotter than expected inflation report and how long he expects these kind of high consumer prices to last.
We work around the world, and we see these pressures here in the U.S., certainly. We see them in other parts of the world as well. And we talked earlier about the supply response to the strong demand we've seen coming out of the pandemic. I think this is a structural element of the economy, at least here in the short to medium term, that is very real across many, many different industries. I think monetary policy and fiscal policy in some ways may have contributed to some of the things that we're seeing, and I don't think these things unwind immediately. I think they do unwind over time, but I think we're certainly anticipating a higher level of inflation than we've seen historically in our planning process, and I think it's something that all companies should be. I'm sure all companies are rethinking their plans for the next few years.
It's more entrenched, here to stay, that inflation.
I think it's proven durable to this point, and I think we need to prepare for it to have some additional runtime.
Additional runtime. Mike Wirth of Chevron.